Hi, my lovely viewers. I welcome you all to Whiscott UK. If you are new here, I will encourage you to subscribe to this channel. Don't forget to click on the notification button and you'll be the first person to be notified when we release a new content. Today, we're going to talk about property. According to Zoopla, the average price of a property in the UK costs around 270k pounds. Yeah, I mean pounds. When it comes to Southeast, it costs over 500k pounds. Let me ask this question. Why is it that Indians are owning majority of the properties as compared to Black Africans? Today we're going to talk to Mr. Osei Mensah. He is actually by profession financial risk consultant. He is also director of KOM Consultant Limited. Guess what? He sits on the board of the startup company called Regalis Incorporated in Ghana. He's a serial property investor in Ghana and in the UK. He is also a founder of a non-profitable organization called the Kingdom Wealth Management. He's going to throw more lights on how we can own a property, especially as a first-time buyer. Welcome to the channel, Mr. Osei Mensah.
Thank you very much. Thank you very much.
It's a blessing to have you.
Yeah, humbled to be here, and I hope I'm a blessing to your viewers.
Nice. Guys, today we're going to talk about asset creation. How do we create assets? Most of immigrants here, creating of asset is one of a big problem to us. Today, Mr. Osei Mensah going to digest everything. So how do you understand by asset creation?
When you say asset creation, in itself, it is a jargon. And when I say it's a jargon, maybe a big word that needs to be broken down. I believe asset creation is basically excavating or tapping into your value as a person. It's not what is on the outside, it starts from the inside. So asset creation is tapping into your value as an individual, so to bring out things, whether it be property, whether it be cash, whether it be equity, it comes from within. So asset creation starts from you as an individual.
I really like where you touch property. Why is it so difficult for Black Africans to create asset? Because checking the graph, Indians almost own majority of property in the UK. Why is it so?
I think your question has a few different parts to them. You mentioned that asset creation, and then we jumped into property to then talk about home ownership. As I reiterated on the first question, I mentioned that asset creation comes first from within. So what we are seeing as a result, that is what we're seeing on the .gov statistics, where it is talking about the Indians owning 70, so they checked households of Indians and the Asian minority. And this survey showed that over the households that are Indian or these ethnic minorities, those guys own 70% of their household. Let us be very clear on that. The numbers for the Indians and for the whites are they own 68% of their households, but the numbers are vast. So we're talking about huge numbers with the whites, and we're talking about fewer numbers with the Indians, and we're talking about, when we come to the blacks, it's also fewer numbers. But it's worth pointing out that for every household that is an Indian, own 100 households that were surveyed, 70% for Indians, 70% of them owned it. Okay, so now we begin to try to understand why. As I said, asset creation begins with the individual. So what we are seeing with the Indians is a product of an investment into themselves. What does that mean? When we come in here, the mentality and the mindset as we come in here, particularly now I am comparing them to us, the Africans.
Yeah.
Particularly the mindset that we come into the UK with is not one of we are going to make the UK our home. We come with a mindset that we have come from somewhere and we don't need to invest in this land.
UK.
And that broke mindset has left us not taking certain opportunities that we really should have taken as, I'd say, as Blacks, even in the United Kingdom. So, to answer your question directly, the mindset is not proper for us, Blacks who come in from Africa.
So with the mindset, with the Indians, what do they have a special mindset? What kind of mindset do they have?
Thank you for asking that question. The mindset I pointed out for first and foremost was, when we come here, we don't aim to make this place our home, or we don't aim to invest even in the land. Our investment, we have typical stories of people living in one bedroom, some living in just rooms, Africans, but then they're building 6-bedroom mansion back home. And what really happens with this is they would live their entire life on scraps. They would deprive their children of the best schools. They will not pay attention to their children. They will do the 9 to 5 and the 5 to 9, not sleeping, no attention to the kids. Kids are not well raised. So what happens? The kids' homework is not supervised.
Yeah.
This is where it starts from. And so our children are not best placed with the right education, with the right tools to face the life that we're going to compete with the Indians. Now, a typical Indian, if you know them very well, I just happen to work with a few of them. Normally, the woman will take the back seat and the man will go out there to win bread. And the woman will ensure that the children, their homework is done. And this is what we are seeing. So the remnants, so they've done that a few generations and then tutored their children. This is why I said asset creation starts with you. And until that mindset is shifted, we will not go anywhere. We need to come to the place, even as Blacks, to regard this as, look, yes, we have come to a foreign land, but we can also possess a foreign land as much as we possess our land. We must live, not exist.
Sure.
We must live, not exist.
Wow.
What we keep doing is we come and exist in a foreign land and seek to live in our own land, yet we still are in the foreign land.
Mr. Mensah, you made mention of people building 6 mansions back home and living in quarters here. So let's say, considering the price in the UK, is it financially wise to buy a mortgage or to get a mortgage? Is it financially wise considering the price? I think you are in that industry.
Yes. It's an interesting question that you ask, and it's a topical debate at present. Any investor, and if you're thinking as a property as an investor, then you have a place to live already.
Mm-hmm.
But if you don't have a place to live, and you're thinking as property as an investment, then we begin to put question marks to what you are looking to say. The reason why I say that. So if you live in the UK and for the foreseeable future, you are going to live in the UK, there's no better time to buy than now, regardless of the interest rate. Do you know why? Because chances are you are renting right now and you are paying someone's mortgage and their profit. Now, the question I ask you is, which one do you want to belong to? Do you want to invest in a property that you live in, give you the peace of mind, and then you are paying off the mortgage. That gives you something later on. The intention is not to make property from where you live, but eventually that's what it becomes. It becomes a saving vehicle for you. So if you start talking about interest rate now, guess what? When interest rates rose, rents also went up.
Yeah.
So you are paying a higher rent because interest rates went up. I can tell you right now that the expectation of interest rates is such that they will be cut. They will start the cutting this year. That's the general expectation and consensus on the market. So interest rates have eased up a little bit. For mortgage rates have eased up a little bit because they price in the expectation, the likelihood that they're going to reduce interest in the future is priced into your mortgage rate. So your mortgage rate is likely to be lower than the base Bank of England rate right now.
I think I'm a bit confused. Throw more light to it for you. So in the near future, interest rate might reduce.
Might. I put a caveat to it.
Okay, so if you buy a mortgage now, how does it affect you?
If you get a mortgage now, well, the mortgage will have factored into their rate the fact that rates are going to go down. So the mortgage rate is an expectation, a long-term expectation of where interest rates will go. This is how the banks price it. That's why the Bank of England's rate is 5.25, but mortgage rates are below 5. That's the reason why, because there is an expectation that it will go down. Now, to your point to say, is it too expensive? As I said, it is never. If you don't have a place to live right now and you're looking to buy a place, there's never a better time than today. The other thing I will add to that is the fact that when you get a mortgage right now, you can get a 2-year mortgage, 2-year fixed mortgage, so that should the rates go down and rates, they reflect through the mortgage rates later on, you can switch.
Okay.
You don't necessarily have to go for the 5-year, which could be cheaper. But if you're really inclined that things will go down and you do that,
go for the 2 years.
Who knows?
How you are putting things, like, it seems simple to get a mortgage, but to be honest, most of us immigrants working here, it's not that easy. Is it that simple to get a mortgage?
No, to get a mortgage, let's take a step back. What are you doing? Getting a mortgage is really a big loan on a property. A big loan on a property so that you are able to own the property and control what goes on in the property. So typically the bank will give you 90%. That's the typical 90%. So if the house price is
90% of the house price.
So if the house price is 100,000, let's call it this way, then the bank will give you 90,000 and you bring 10,000. Now, there are various elements to this. So now let us look at number one, the 10,000, which is you will bring it. So just as she said, so the difficulty in getting mortgage, number one, mostly is whether individuals have the deposit.
Okay.
Now, the deposit requires the individual to be disciplined enough, hardworking enough to be able to raise that amount of money.
10%.
10%.
Wow.
10%. Some banks may do 5%, but it's not very common.
Oh, okay.
It's not very common. But 10% will put you in a good place.
Okay, so
especially for immigrants that have come in. Yes.
So on average, what is the price of on average 3-bedroom house?
Bedroom.
Yeah, on average.
You did not start from 1 bedroom or 2 bedroom. You did not start from 2 bedroom. Started from 3 bedroom. So the average price of a house in the southeast is now taking around 350,000 pounds. Now, if you go into London, it goes up. And if you drift out, then when you begin to look at the average prices up north, then it begins to be a bit lower.
Oh, okay.
Yes, sorry. The average price in the southeast is around 450. For the whole UK is 350.
Oh, okay. So the average is 450.
So I talked about your part, which is the deposit
Of the
the
10%. Yeah.
That in itself is one. Then the next one is, are you eligible or do you qualify for the bank to give you the 90%?
So they're gonna assess you.
Yes. Do you qualify as an individual? Why should the bank trust you to give you 90%?
Because I'm thinking like as far as I've been able to get a 10%, the bank should trust me.
Why?
Because I've been able to provide the 10%.
Well, it's not enough. They're providing 90%.
Okay, so they are the majority shareholders.
Yes, in effect. And the UK housing market is owned predominantly by banks.
Oh,
Yes. I mean, individuals own portions of these properties, but the banks, pension funds, they've all invested in these because these are asset units that they believe will track it above inflation and will be able to give some returns. So going back to the fact that the bank has to trust you, the bank has to assess you and ensure that you will be able to continue the payment of your loan, because we're talking about a loan of 25 years, 30 years, sometimes 35 years if you're very young. So I entreat all those folks that are young, get the mortgage early so that it's spread over a longer period and the costs are lower. Okay, so what do they assess about you? They assess your credit. If there's any credit footprint. What is credit footprint?
Okay.
What is what are the different products that can be used? Many young folks get phones. They get iPhone Pro, iPad Pro. They get these from these phone companies, and some of them don't pay them, and then they put them on what you call county court judgment, CCJ.
Oh,
which means they put that on your credit. These things begin to stop you from getting a mortgage.
wow.
So we need to be mindful of our credit cards, loan, any form of credit that you are taking. Shop cards, people get shop cards. They go for shopping and they don't pay. And then they leave them and then they're getting red letters. These are going to stop you. It doesn't matter if you have 20,000 in your account, 100,000 in your account, the bank will not trust you.
Wow.
The bank will not trust you to be able to give you that because you did not prove yourself. Now, that is a very important part of this. Then other aspects come in. What's the type of home? Sometimes lenders have restrictions to various different locations. Sometimes you're getting a flat and there's a restaurant underneath, and that restaurant works with open fire. You might go to a lender and then they'll say, no, we can't borrow to you because this is the state of the property. So the state of the property also plays a part. So you don't just walk in, I have 10,000 or I have 20,000. Oh, give me a mortgage. And then they say, yeah.
Oh.
Other key aspect which most people may know is they assess your job, what you do, your stream of income, and whether your income is good enough to cover your mortgage.
Okay. So talking about income, so on average, how much should one earn before you can be eligible for a mortgage? On average.
Well, let's take a step back. What is the average house price?
So you made mention
so we have 450, we have 350.
Yeah. So how much should a person earn before you can be eligible?
Well, first of all, if you put those numbers in check, let's take the 350 for one. If you put that number in and then you say, right, okay, I want to own a house worth 350. you need 35,000 cash,
That's 10%.
10%. And then when you take the 35,000 out of 350, you have 315.
Mm-hmm.
Yes. Of that 315, the bank normally lends you a multiple of your salary. Yeah. When I say a multiple of your salary, bank gives you, if your salary is typically, let's say, if your salary is 10,000, the bank may give you 4.5 times your salary for mortgage. So if you earn 10,000, the bank will give you 45,000.
Oh.
If you earn, or 45,000 to 50,000. So if you now look at the 315 and you say, I don't know, divided by 5, you're around 65, 63,000.
Yeah, so on average, the average black African, there's most of our colleagues working here is carers and all those things. That will make it difficult.
Yeah, that makes it difficult. But I tell you this, you can come together as a couple to buy. 63,000 may seem big for one person, but may not be that big for two people. So that's one way to buy. You can join up, especially if you're looking to marry or you are already married. It makes sense. So it calls for coming together. The other thing I would say is there are other ventures. There are other ventures that one can use. There are some have let to buy. So you let the property and then you buy it eventually. That's a scheme. Just to mention that most of the schemes have been geared towards the natives of this land. That means you have to be a citizen, or you have, in the fewest, you have indefinite leave to remain. That's for the schemes that the government is offering.
Oh, okay.
Yeah.
So that means those schemes don't favor.
Some schemes will not favor some immigrants, and particularly if you are not in the health sector. The health sector is looked at very kindly, and so you may have access to it. But if you are in other sectors, may not be so.
No. You made mention of you can spread this for 35 years, 25 years.
Yes.
So that means you're going to have this financial commitment for 35 years.
Yes. I mean, are you not going to have a financial commitment to pay your rent for 35 years if you don't own one?
That's it.
Yeah. Why do we focus on?
I'm doing the questioning. Yeah, so maybe for 35 years, you're gonna commit to paying this mortgage.
Well, correct. It's true. There is that commitment, but you don't commit 35. They amortize your payments over 35 years, but you commit 2 years, 3 years, 5 years at a time.
Oh, okay.
So that's why we say, oh, this person has fixed their mortgage for 5 years. This is in the UK, which is our beloved UK. You go to other countries in Europe, France, when you lock in for 25 years, you've locked in for 25 years.
Oh.
When you lock in France, Canada, certain parts of, France, Canada, Europe-wide, certain parts of the States, you have some of these products where you lock in into an interest rate and you lock in for 25 years and you're paying your mortgage for 25 years. In the UK, you are paying, they've amortized over 25 years, but you're locked in for maybe 5 years.
5 years.
And then you can track the interest rate as it goes on. But yes, bottom, what's it called? In a nutshell, yes, if you don't have cash to buy your house, which is worth 350,000, and you borrow to buy it, do you want the person to let you pay it over 10 years? Which means you will pay something quite high.
Sure.
And it won't fit your living expense.
I think when you made mention of people coming together,
yes,
like husband and wife to buy more, don't you think that's the key factor the Indians are using?
Yes. So I mentioned to you earlier on that that asset creation starts from within. Just by the Asian man and the wife coming to an agreement that, look, I'll go out there to get the bacon. You stay at home, help me with the children, and let's do this together. Just by that shows a certain level of unity. Whereas when we as Africans come, daddy's gone, mommy's gone, kids are by themselves. No one really knows. And so we don't harness that togetherness. That will then make us trust each other to then come together and then pursue some of these opportunities. Yes, correct. The Indians, the Asians, they do that a lot.
I think it's hard time we Africans, Black Africans, learn from this India, because to be honest, I like how they work together. Almost all the restaurants, I say almost, owned by these guys. Where I lived, almost all the fish and chips owned by these guys. Yeah. I think it's hard time we have to learn from it. So per your analysis, that mortgage is a key. Asset creation is a key. So what are the factors you think one should consider when choosing where he or she wants to live or getting a mortgage?
Most of us as who have come into this country, you want to also assess yourself in how portable your work is. When I say portable, you can move your work, or you can work in different parts of the country. If you can work in different parts of the country, and let's say you work in London, there's a London waiting, the salary is good. But then when you move out a little bit, you can live better, but the salary is slightly low.
Yeah.
You want to assess the cost of living from that. That will bring value into you. Remember, you as an individual is a business that you're running. So what you want to do is limit your costs and increase your value. So I'd say you move into somewhere that will create more value for yourself. Okay. Some of us have support systems. Yeah. And so those support systems mean that it kind of ties us around a certain area. If that's the case, that's fine, because that's also value. Now, what you want to do is you want to get a place that is commutable to your workplace. You want to get a place that has access to good schools. If you're a young family that's looking to grow, you want to get a place that have access to good schools, good catchment. I myself have moved around a little bit, and in the quest for some of these things. And remember that if you are looking for the place, or you're looking for a place in that area, right? The reason why you're looking for a place in that area, there are other people doing the same. Yeah. So what does that do? That makes your property marketable. So later on, when you're finished in life, or when you have outgrown the place, you will be able to sell the property like that, turn it over, get some money, and go and do whatever you want to do. So it is very key to understand the area that you'll go and live in. Sometimes the area might not seem well built already. You should always have the future in focus.
Always have the future in focus.
You should always have the future in focus.
Mr. Manson, thanks very much. I think today I've learned more from you. There's this perception out there that mortgage repayment is more than rent. The cost of mortgage repayment.
Yeah. Okay. Thanks for that question. The cost for mortgage repayment is greater than rent in some aspects, and this will vary. Okay. Because when we say mortgage repayment, then what people don't realize is many a time we refer to the full repayment, or should I say, you are paying back the interest and the capital back. So remember, we borrow 90,000 from the bank for every 100,000 for a house. we pay back that 90,000 over the course of the 30 years, 25 years. Right. So the repayment means that we're paying both the money that we borrowed and then the interest that the bank charges.
Oh, I see.
But most landlords, for them to make the rent marketable, what do? They go into an agreement with the bank and say, right, I'm not going to pay back the 90,000. I'm just going to pay the interest. Now, when you're paying the interest only back, which is the interest only mortgage, you will hear of it, interest only mortgage. When you pay the interest only back, that is reduced compared to the repayment. So if I have a reduced interest only that I'm paying to the bank, then I can easily charge you something that is lower than the repayment.
Oh.
And then still make some cash flow as a landlord. So that's basically why you will have rents lower than. So you are paying for the landlord's interest and then you are paying for their profit.
Oh, I see. So per this, is it advisable for first-time buyers to go for the interest only, since you have to pay less monthly?
That is if you find a lender. As a first-time buyer, first-time buyer, the UK financial institutions are very well regulated in that there's no encouragement for first-time buyers to get interest only mortgage. So first-time buyers, wherever you are, mostly you wouldn't have the access to interest only mortgage. It will be a repayment mortgage. They want to encourage you to reduce that, again, going back to it, 90,000, not leaving that 90,000. Now, the reason why landlords can do that is because they own their homes that they are reducing, but they bought another house that they're using for investment. And on the basis of that is what the bank is giving them the loan. So when you buy a few of them, you can buy them on interest only, rent them out, and then you make your.
So that means it's always advisable to get maybe your second home for the interest only mortgage.
Right. So when we come to second home and you're going to rent it out, yes, you will be. And if you're getting an interest only mortgage, the bank is going to check whether you have your own living space first. You have a home for yourself first before they will give you the interest on.
Mr. Say, is there any advice for immigrants planning to buy their first home? I think we need this advice for immigrants, especially Black African, planning to buy their first home.
The advice I will share to you is there is a position wherever you are, wherever you are, whatever you are doing now, there is a place for you on the property market and on a property ladder. You might say I'm saying something outrageous, but believe me, you have got to engage the system sooner than later. House prices are not going to go down. The only way is how. House prices double in the UK historically every 10 years. The question is, where would you be in the next 10 years? Now, you may say, I don't have the means. But yes, you do. Begin to engage the system. Understand what you ought to do to be eligible for a mortgage. Engage every scheme that you can. And there are schemes. Wiscott over here will point any viewers who need help to myself. What I want to say is engage in the process now. Don't think of starting later. Also, don't neglect the fact that you are in the United Kingdom and say, I am going to build in Ghana without building yourself here. The properties in the United Kingdom are more tradable. They can be sold more readily than the properties back home. So buying a property here has not shortchanged you. As a matter of fact, it is an investment that will lead to something greater and better in your life. So I will entreat everyone to engage the process now.
Thanks very much, Mr. Osei Mensah.